BitShop, the first fully privatized on-chain auction house, introducing new ways to generate liquidity for Web3 assets, backed by KuCoin Labs and Republic Capital. Bid small, win big at BitShop.io.
Coming to you live from London. It's just gone a couple of minutes past midday here, making it just gone 1100 UTC. A big shout out to everybody joining the stream live today. See some old friends in the chat already. Nipar, good morning, my friend, MM, and everybody else that is joining today. Also, a big shout out to everybody that watches these on recording and also gets in touch as well. Big shout out to you all. So, happy Wednesday, fam. How are we doing? Kelly, you legend, here, of course, as always. Nit's holding off the lunch session today, hungry. Holding off lunch. Sorry for this session, hungry. Awesome. James, my friend, good morning. And Whack, how are you doing, buddy? How is life in that tropical paradise treating you? You were back in London recently, weren't you? Or this part of the world? Certainly kind of Europe way, I think, Whack, unless I'm mistaken. I think we've got some of your Singapore sunshine today, mate, over here in London. It's nice to see it back because we have been through really, really rubbish weather this summer, actually, here in the UK. And obviously a British person moaning about the weather is nothing new for you all. So I'll digress before I get too deep into it, but it's very nice to see the sunshine back again. Yeah, good morning, everyone. Good morning. Awesome. Yeah, you're welcome, mate. I mean, if you've got any more questions on that, Whack, excuse me, do pop them on there. They're quite... The thing that makes them quite tricky to kind of get across is there are different teachings on them, whether you're looking at them supply and demand, order blocks, etc. But what I would say is when you really start testing it and going through a lot of data, what happens is you'll typically start seeing things like, for me, when I used to, and this is a long time ago, it's taken me a long time to actually get back into this at the moment. I'm trading prop desk. James 14, who's in the chat there, is one of the people trading it with us as well. Back on traditional markets, it's been a long time for me, kind of getting my eye back in with that side of things. But I remember as I was developing my systems for traditional markets from my early stage mentorship with ICT, I was actually finding that in those days, we used to make an allowance more for the body, right? So you would take, if you were looking for, the top line of the body, and maybe making an allowance for the lower wick, or allowing for the wicks if they were followed by a fair value gap. And even with those kind of teachings, as they progressed over time, they changed. So what I would say is, as with any candle, I see it that the volume is in the body of the candle, right? And the wicks are where price has tried to get to, but has failed. So in terms of where I expect the main reaction to be, it's always within the body. But like with anything, what I'd say is go away, really test it and see how you kind of get on. But again, if these things are a bit convoluted, I know the sessions are really long, right? I kind of obviously come from a lot of my inspiration, especially in my early years, and still today, right? It comes from Trader SZ. And I remember sitting there through so many of his early day Forex sessions he used to do. This was on like MT4 and stuff like that, right? And he would run these, hour and a half, sometimes longer sessions. And I think that kind of always got in my head with it. But I also do, he's a world-class shit poster. I just, I don't shit post at all. I just waffle on quite a lot. I'm not particularly efficient with my words. So, excuse me, guys, still got a bit of this chesty thing going. I'm really not sure what it is. But if you do have any questions, or if you find the stuff a little bit unclear, do let me know and we can run through that again. So, excuse me. Hang on, let me have a sip of tea. Cures everything. Right, so I had an alert go off on Sol. Just to, oh, Kelly, bless you. Awesome, because I keep trying to make them shorter, and every time I try and make them shorter, I seem to extend them by about 5%. So maybe by stopping trying to make them shorter, then we'll find a happy medium. So if you do have any specific questions, guys, especially as a group, let's find a happy medium for something we want to understand, and I can try and make like some shorter snippet videos, recording ones, maybe mixed with some graphics and stuff, just as a kind of refresher. But yeah, hopefully it's really good to hear you guys get value out of the sessions. Erica as well, greetings from the sunny Dracula land. Beautiful country. Been fortunate to be there a couple of times. I love traveling. Don't do it as much now. Used to do a lot of traveling around Africa and that as well, but obviously Europe bits and pieces are amazing. Still need to do more in South America. Love Asia. Would go back to Asia in a heartbeat. And Hans, who is a absolute Butte and a very long-term attendee of the channel who can't be here today. He's from South Africa, and it's a South African holiday today. And that, for me, is a country that will always take some serious beating. I love it out there. I'd move out there in a heartbeat, but I don't think the Husky would be too happy with me. Right, so what are we feeling? Long and strong, I like that. What are we feeling? I've got ETH up, right? So I'll start waffling on a little bit about ETH, shall I? Let's take a look at some levels, what we can be looking at. And then from there, let us know what you've got, guys. Let's just really try and rip through some today. If you've got any questions in terms of the TA or anything that I'm looking at, if you're new to the channel, please don't hesitate to ask questions. Yeah, we've got a really great and knowledgeable community in this channel as well, who are always happy to help. And everybody's been there, right? We've all been at that point where we're learning, so don't feel shy. So with ETH, right? OP, okay, mate. Yeah, no problem. I think that's AI coin, right? Yargo, hey, buddy. Welcome. Good to see you on here again. So when we've got really choppy PA like this, and when I mean choppy PA, this is a daily chart, right? We can see basically, if you just took the kind of average of this, if we look at this as like a deviation, yeah, we squish the chart in a little bit more, you could almost kind of say something like this, right? In terms of a range that we've been trading in. Yeah, I know we've got this kind of little bit before, but I think this was kind of its own little consolidation here, right? Its own little consolidation. We had a nice power of 3 here, right? So our power of 3 is where we're looking for a consolidation, a manipulation. Yeah, trying to send people the wrong way before you ultimately then get the expansion in the opposite direction, right? And you will see this play out again. Imran Khan, my man. It's brilliant to see you on here, buddy. I hope you've been keeping well. So this is what we're looking at in terms of a power of 3, right? They very, very rarely look as completely clean and clear as you see, in some examples. But we're not cherry picking here, right? Because what we're saying to ourselves is, we're taking the recent data. This was clearly a consolidation. It happened after a pump. Yeah, so we pump, we consolidate, we manipulate. Yeah, and we expand higher. Even though this looks a little bit like a failed one here, you had on a smaller scale a little bit similar here, right? When you create these range-bound environments, even if we're just using the bodies, right? Let's drag this across to here. You can see what happens in a range. Price gets to one side, deviates. Price gets to one side, deviates, shoots off to find liquidity on the other side, right? Deviation, back in the range, liquidity lower. Deviation, higher. Deviation, lower. Yeah. Deviation, then can you see the difference in this breakout, right? So we can just see that in here, right, that we're just ping-ponging around in here, yeah? Right. Now, one of the really big things for me here with this manipulation move, whenever I'm really trying to look and see that we've got manipulation, I'm looking for quite a deliberate move, right? So you see how they really kind of lack conviction. You can see the long upside wicks, yeah? They're showing you that price is getting ready to force its way back in the range. Fine, no problem. One of those could easily have shot out the other end as well. But you can see the impulse that's made down here, right? Now, one of the first things that I look for, let me just put this up here for a second. One of the first things that I look for here on any time frame is this. Remember, we started covering this a lot more on recent streams, right, which is our inverse fair value gaps. Now, there's a brilliant ICT trader who I've known for a little while now as well, and a really, really big exponent of this. And it's something that I use really when I'm trying to not find sort of tops and bottoms, when I'm trying to find like a really key reversal point. And what is it? It's an inverse fair value gap, right? So we've got this fair value gap here. See the gap in this black candle here. So the wick of this candle here and this candle here don't cross, right? Same as they don't here, same as they don't here. This creates a fair value gap, right? Now, the reason that this is in purple, a bit more prominent for you guys, is because we come through. Now, our theory is with a fair value gap, If we're bearish, like we are here, we set this fair value gap, see how price trades into it here, and then sells off, searching for liquidity below an old low. Yeah. So how we're looking at this in terms of order flow, or how we're looking at this in terms of price action, is that price is either reaching for liquidity resting above old highs or below old lows, or it's looking to rebalance an inefficiency, an imbalance, which is a fair value gap. Yeah. Which is meaning that if we look at this up here, and you're going to have to forgive my terrible arrows, I really can't draw with this thing at the moment. I'm on a trackpad, right? So see, we sweep the higher here. Yeah. Now we've taken liquidity here. So what's our next target become? Well, it becomes this fair value gap in here, right? So there's an expectation the price rebalances here and then moves out. However, let me clean this up so we can see it. What actually happens here, price does come down into this FVG, right? Here. So we get our long setups trading higher. Ultimately, when we fail it, see, we close below it here and here, this becomes an inverse fair value gap. Therefore, we're now looking for price to fill this bearish fair value gap and search for liquidity below this low. Yeah. So that's what we're looking for. Ultimately, when we have a move like a power of 3, when we see something like this, when this candle closes above it here, the high probability setup is that price is first of all chasing this high and then that high. All right. So that's how we look at it. Keep it really nice and simple. We just say to ourselves, okay, where's price heading for? I think that's one of the really, really big things that people don't focus on. People will jump straight onto a low time frame chart, see a load of chop and think price is going here or price is going here. It's not always the case. You really want to have a high time frame view and you want to frame your setups around that. Now, you're not always going to be right, excuse me, but we're in a game of probabilities, right? I think sometimes things like crypto Twitter, some YouTube and bits and pieces people are cherry picking these setups. And it makes it look like they're kind of, I see this thing on Twitter with people like, I'm 100% for the month and blah, blah, blah. Yeah, of course it happens. 2 weeks ago, I was 100% for the week trading FX. And then last week, I lost 4 trades in a row, right? So, your 100% win rate doesn't matter. What does that mean? Well, over that 2-week period, I'm at net positive. Because my 4 losses were 1R losses, and my 4 wins the previous week were more than 1R wins. Yeah. But even if they weren't, the whole point is that this thing's playing out over time. Yeah. So you have up months, you have down months. If you look at seasonality charts, it's the same with traditional markets. So we've got our inverse fair value gap here. We have our expansion. The next part I just wanted to draw your attention to quickly, remembering that this would be relevant across any time frame. Let me just delete this. You understand the price movement here. Now, when price came up to here and we had this breakout, yeah? So you see when we had this high and we broke that here, see how we didn't close above it, right? What we would have wanted to see is price come up here, treat this as support, and then we would look for it to move higher, right? So what happened here? Fucking hell, pardon my French, I really cannot draw these bloody lines at the moment. Right, so we came up, same thing, right? Price came up, came back down. It failed to treat this as a base. Yeah. Now, we had this little breakout here, right? So if you were being really, really cheeky, do you know what? Sod it, I'm going to do it with this, right? Right. So you see this breakout here. And then when price comes back down, see how we then get this breakout? See how price starts to close above the prior breakout, which it failed here. Yeah. So as we get that close above, all of a sudden, we're looking at a little bit like there's a bit of strength here, right? So then we can say, okay, well, if we apply that same principle here and we mark this high in the same way that we marked these, see how we start to get closes? So we don't have to be, we don't have to be gung-ho here. We don't have to be cavalier. We can just say to ourselves, okay, we've got bullish momentum. We've left a bullish fair value gap here, right? So now we've held the breakout from this consolidation and we're starting to treat it as support. Price comes in here, finding support. We treat this fair value gap as a bullish launch pad until we close below it. Once we close below it, we would look for a retest of it for it to become an inverse fair value gap, same as this. So look, close above it, right? That means from this point on, from this candle's start, we're on the lower time frames looking for entries. We set this fair value gap. We get our long trade here, right? Ultimately targeting liquidity above this high. All right, so that's what we're looking at. So keeping that in mind, it's always worth looking for these, these outliers, these big moves, and quite often actually, you can see them kind of line up with high volume spikes. Yeah. So you see this one here, see how the volume builds. Yeah. We get the spike down. I see that very much as larger players, institutional buyers, flooding the market in order to push price down there with the pure idea to catch the market offside, fill all of their long orders down here with the liquidity that's there, and then reverse it, right? So there's little things that you can do to just find these. However, even when you look at a chart like this and you look at the main consolidation areas, any of these real kind of key spikes that have been heading below lows and highs, have turned out to be deviations. So that's what we want to kind of have a look for. All right. Yusuf, yeah, hey, buddy. Yes, we did, mate. I'm sorry. I thought you might have just nipped off the stream then towards the end. Apologies, because we did cover it very late, but I did add in YGG. I'll take a very quick look for you at the end as well, mate. Let's see if we've got anything. But basically, I think what we were saying was it had such a big rip, we were looking to short it down to the next fair value gap below, then look for it to hold that, I think on a 4 hour, and then maybe look for continuation. But for me, and I haven't looked at it, unfortunately, but we will take a look. I think once you get these big expansive moves like that, they're the type of things you want to be looking for short setups. Try and find previous high where we could have run liquidity and look to play short, aggressive intraday trades back to the next kind of key level of support. So it's actually a really good technical example. So we will take a look at that, guys. Let's have a look. Is that accumulation, expansion, retracement? No. So so it's accumulation, manipulation, expansion, So that's certainly how I see it. So you've got your accumulation, you've had this run up here, so you had the expansion here, and then you had. So you could look at it in a way. This is quite messy in truth, right? But you could almost say in a smaller way that this was the accumulation was here. We had a little manipulation here. We came back down to the far side of the road. Accumulation, manipulation, expansion. Now they don't always look as clear as that and as clean as we can see with that example here. But what you can see is the price is clearly failing to make a move, setting clean higher highs, higher lows here. So we can always trade these with the expectation that if this is the deviation, we don't know this is definitely the manipulation. It's a manipulation in a form because it's a deviation, right? Meaning it's come back but outside the range and back in. But we can still trade that with the expectation it meets the far side of the range. And then we can look to compound that trade, to trade higher if we get these kind of signals, So see here, we would have traded this one from the high to the low, low to the high, high down to the low, low to the high, hold the high, so we don't need to close out our trade here because we were in down here somewhere. It gives us a bit of breathing room. We then consolidate here, which we notice we haven't done above these highs, right? Showing that price is getting ready to make a larger move. So even with this, you can look at this consolidation on a lower time frame, wait for price to run the low, trade it back to the high, wait for it to hold these highs again. As we can see it does here, just very, very roughly, but right. These highs here, price hasn't closed above these, has it? Same way as we were talking about down here. Wick, expansion through, target this fair value gap in here, and then look to trade it higher. Fail that fair value gap, inverse it, and we look for price to then trade lower. Okay. Quick question here thank you as well, James, for updating Yusuf with that. Really good of you. Yusuf, bro, when you work with VSA and volume in general, I think we must deal with biggest platform volume such as Binance, or it won't be precise. Yeah, absolutely. I'm not really someone that deals with volume, but you're right. If you do really want a clear read on volume, then you do want to go to the biggest exchanges because they represent the highest trading volumes. So yeah, it's a really good point there from Yusuf. I'm day trading this on Binance. I don't really use volume. But Yusuf's right, if that is something that really makes that part of your play. And I recommend if you do use volume, looking into traders like Bast, Razoon, they're both brilliant exponents of volume, not just your kind of trade volume, but your VPVRs and bits and pieces like that as well. So I'll keep sold towards the end because that was just one that interested me because I had an alert go off that on it earlier. But we had a request for OP and also I think I might have it on here already. Actually, let's have a look. Yeah, here we go. And then also YGG as well. We'll take a look at that for Yusuf at the end. But guys, if you've got any more, fire them over. And we'll take a look because we've still got a nice amount of time left in the stream. We've got plenty of time to cover everything. You're going to have to bear with me on this at the moment. I've contacted TradingView about this. I keep having multiple speed tests done on the system. Maybe I just got too many charts open for my Mac. But it normally doesn't struggle. But anyway, it can just be a little bit slow at the moment. So let's have a look. Aha, James, there he is, XRP. Oh, now they're coming in nice. Erica, Hive. Awesome. Okay, so let's take a start with this one, shall we? I think it's still potentially just loading some bits and bobs in the background. Yeah, see, I always use the web browser of this, right? I don't know what it was, didn't really get on with the app, but having so many of these screens open, I suppose, is such a draw on the processing power. Here we go. Right, so let's Right, so immediately, old chart, prime example, right? See this? What happened? Expansion higher, we traded back down into this bullish fair value gap. Yeah? Bullish fair value gap, price traded back down into it. Look how the body's respected that. Crazy, right? So look, we're looking for longs here into here. We're then looking for longs again here, but we're a little bit more cautious because we've revisited the fair value gap without taking the resting liquidity, right? So we approach with a little bit of caution, fine. When we close below this, remember, that's now become an inverse fair value gap, right? Almost, think about it in terms of how we would look at a support and resistance flip. And then all we're doing is price is closed here. From this candle on, this bearish fair value gap is here. We look for shorts here. We trade down to the liquidity resting below that low. Beautiful. We look for shorts here, trading into liquidity below that low. Ultimately, we don't get it, right? So then what we do is we then go into our chart to look for structure breaks. We close above here, longing up into here once again. Before we look for continuation, we're simply looking for that fair value gap, right? Looking for longs from here. We fail the long setups. Maybe we get stopped out. But the moment we close below here, our bias is that we're heading for this low, and then this low. All right? So just to give you an example on that, just before I kind of get rid of all of the old markups on the chart. So we've got a nice clean chart to work with. So the first thing that kind of stands out on this is that we've got a kind of really nice steady growth line here, We can see as we're coming in, we're setting higher lows, come down, take out this low, get liquidity, pump higher highs, higher lows. It's an interesting one, this, because it's showing strength for sure. Let's kind of get our key levels marked up and see where price can be reaching for. Now, clear and obvious high is this one, right? I mean, in terms of a low, we don't want to go too far down because basically we've got quite a nice structure here, going on in the fashion of an old broken record, right? But there's our inverse fair value gap. So we're looking for bearish trades here, short down into this low, lovely. Then we get the expanse higher, we close above it here, so we now target this fair value gap once it's confirmed. Longs from here, longs from here. We've got this fair value gap here as well. So even once we balanced this and we looked for longs, the keen-eyed amongst you might be saying, well, hang on a minute, there's another FVG here that we failed, right? Exactly right. So bullish fair value gap, looking for longs here, close below it here. So what do? Trade for liquidity below this low. Yeah? See this? I hover on that. How we just nicked that there and took that out. What then happens is we get a strong close back above it, closes through this bearish fair value gap, meaning we're now looking for longs into this high first of all, and then we target the clear and obvious highs moving up. So if that's the current nature or the current trend of price, certainly the current dynamic of it, then at the moment, we're looking towards this high over here. Yeah. Now, in terms of what my bias would be here, well, we've obviously got a bullish market structure and we're currently holding bullish fair value gaps, right? So I know our kind of most recent one was here. So we mark that in, which is our daily. So we can put a D on that. Right, now, one thing that I'd be slightly cautious of here in terms of continuation is that we've run this key high, right? So we've swept liquidity above that high. No, we took that high out earlier, so that's not really relevant. We've swept above that high. Now what we want to see is price hold this area, right? Now, if we're looking down here for the order blocks, the down candles before the expansive moves higher, I would just mark this up here as the top line of this order block. Yeah, the down candle before price moved up higher. The other thing that gives it validity as well is that we're clearly at some kind of support and resistance level here, right? Resistance, 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 price breaks, closes above, retests it, moves higher, right? The other thing that would give it even more validity is if we had some kind of fair value gap afterwards, which we don't in this case. So now if we're looking for bullish setups on this, remember we're still on the daily at the moment, then we can look towards this daily order block. Perfect, right? So now I'm going to drop down to the 4 hour. We're going to say, is there anything cleaner on the 4 hour? I would imagine with a move down like this, we could potentially have fair value gaps above, right? Let me just turn the session breaks off for a second. Now, I know we were a little bit late to this move, right? So as with anything, power of hindsight. However, just really, really simply, we can see that we ran a key level here. Why is this a key level? We'll look at the downside, the upside wick on this. What happened when price hit that? It just shot back down, didn't it? Meaning a lot of people closing out positions, a lot of sell orders up there. Meaning that if we run that again, the likelihood is that we're going to get the same reaction as that. How do we know what to do if we don't? Well, remember, as we were talking about before with the power of 3, we can look at the higher. And then from here, when this high was set, we would have wanted to see price kind of do something like this, right? Hold this, and then build a bullish structure moving forward. What we actually see is that we got the long upside wicks here and here. Price came back down within the range here. And broken record time, we came back under this. Now we closed here, right? That's fine. So people say, yeah, but you've lost so much of the move, but you haven't. You dropped down to a lower time frame. Where's price heading for here? Well, like we said, the resting liquidity, yeah, which was here. So we've got an idea of where price is going to head, right? We haven't touched it yet. We closed below on this candle, yeah. So just mark that up for a minute because I'll just show you how we could look to get into those positions. But for me at the moment, I feel like this is probably the next target down here. Just move that back. Right, that's very much aligned with this. I know this is a little bit lower, but this line here, I mean, the top of the order block and this are pretty much in the same spot. So I think if we're thinking like institutional buyers, would we want a price to just recover from here? Probably not. We want to generate more liquidity, meaning that, a purge below both of those lows and into that order block, followed by a recovery, would give us a beautiful setup to look for longs. Yeah. We'll look at that in a second, actually, just that setup, just see, if it kind of gave us any opportunities to get in. If we just drop this down to the hourly, though, we can start to make this, and we can start to overlay, the same principles, but on the lower time frames. So I still want to see these lows taken out. Yeah, I think if price kind of reverses here a little bit, it's kind of reversing a little bit in the middle of nowhere. I certainly wouldn't see that as a sign of great strength. Now, this remains grey at the moment because it's a fair value gap, meaning that while we're bearish and our bias is bearish, we would actually be looking for this to reject and take us down towards our target down there. However, if price doesn't reject it, yeah, so ideal world move would be this. Right? Now, in likelihood, when we make this move down, we're more likely to get another fair value gap down here somewhere, right? When we see that drop and the purge through. So again, we would be looking for that to flip, right? If we reversed now, yeah, and just did something like that, then we would be looking for that to flip. And then we can start looking to make day trades attacking these targets up here. So in terms of what that would look like, in terms of actual setups, let's take a look at the one that played out here previously. Perfect. So we get our London session, yeah? Now, depending how you would want to trade this, there's a few different ways that you could trade it. For me, do you see what I mean about this being a really obvious move higher, right? We haven't broken market structure, so we shouldn't be shifting our bias to being bullish here. But you can see that there was a definite intensity of movement and a high volume stepping in as price fired up above. We took out this and this, these little kind of, that is an intermediate term high, right? But these are real kind of micro highs down on a 5-minute chart. What I would be looking for here for conviction is that, right? So using our inverse fair value gaps again, we see the big move above it. Now, this fair value gap here that's created, if this really is a genuine move, bullish move, when price comes back down into here, we should see a bullish reaction and we can then start to get bullish setups above here into these highs. But we've got to remember our high time frame bias, which is bearish, okay? So when we see this fail, yeah, exactly the same as we've done on the higher time frame charts. See these? Yeah, see we've closed below here. We create this fair value gap. Remember what we said, we can look to take entries within this fair value gap, and we have some nice ready-made targets below, right? Which we can see was this line here. We didn't quite reach it. No problem. Stop loss above here. If you'd had the iron hands to let it play out, you'll notice that we did come down and take out this low. Sometimes it can really, really be about patience, right? Because what will happen is you'll take an entry in here somewhere. And with these type of entries, you can use the bottom of this, set a limit order on the bottom of the inverse fair value gap. When you then get a close below, yeah, then you wait for price to re-trigger that. Your stops would ultimately go above this high. Or you could look to take a breaker entry as well, right? You got this last down candle here. It's a little bit tricky, this one, because I'd want to see a cleaner high than the little ones we've got in there, but technically it's correct. What would we do here? Same principle. Price closes below here, which we get with this candle. Our limit order goes on the bottom of the breaker candle here. We get triggered in here. This one would start here. We would take our stops above the swing high that resides above here, always adding on a few points. And then we'd ultimately be targeting here. Yep, we would have got stopped out here, but we would have already taken some profit on the way down here, and we certainly would have been getting out above this order block or this order block here. Once again, I won't bore you with it, but look, we've got an inverse fair value gap here. We get that close above it, we can look to get out, all right? Obviously, this entry, we would have our stops above this high, which would have kept us in for lower targets, but we would have also had a larger risk, right? So henceforth affecting the reward. So in terms of where we are right now, obviously, we don't want to get too lost on this low time frame here. We can see our purple boxes. Hopefully, we get some kind of setup that purges down lower. But ultimately, if you're looking to monitor this on lower time frames, yeah, then what I'm looking to do, or what I'm looking for mostly, is confirmation setups, meaning that you can take setups at extremities. We can see we've run this high here, but I want to see the market show its hand. Yeah. Now, to me, that's told me here, yeah, that this is looking to move lower. Or it's told me that this is a manipulation, I'm wrong, I get stopped out for 1R, we get back above this, and then I'm even more happy to long it, because I can then see this as a confirmed deviation. It gets back above what was holding price before, and then we can look for longs. However, within here, we target shorts within our fair value gap. First target is here, yeah, and then we're looking to trade this down to here. All right? And we can see now we start to get the speed and the acceleration in delivery. as price is searching out that liquidity because it needs to match the buyers and the sellers, and price is ultimately heading down here. It doesn't always get there. You have order blocks in here. You can get price front run. You can get really large accounts that want to take profit because they were short up here and they want to get profit taken early, and you see these reversals. But typically, price is attacking old highs or lows, attack this old high, yeah, and then price breaks down. What happens? If it's not going for liquidity above an old high or low. In this case, we expect it to be searching for liquidity lower. We look for it to rebalance the fair value gap. Price trades lower. What happens here? Price comes up, rebalances this fair value gap, trades lower. So we can chase those as we're moving down. Now, the other thing, and I know I cover this on some streams and bits and pieces, and as I always say to everyone, I am a student of ICT, I'm a student of Trade Resi, a few other people have been very fortunate to some really great people to study under. But really do make sure you go to the originators of the material for this. Do go and study ICT. I'm more than happy to tell you how I look at this. Excuse me. I'm more than happy to see that, but I do always recommend going to the source. Those guys are just absolute kings of knowledge. In the same vein of people I'm lucky enough to work with, I learn loads of stuff off Crypto Burb all the time. He's such a calm, composed character, amazing swing and position trader, which I struggle with massively. I think I'm a bit OCD. I think I've probably got a little bit of ADD. So keeping positions open for days and weeks is just a torment for me. Nick, when I chart, I've noticed that breakers are sat below the fair value gap, hence the lower entry point to execute. Do you think that's always the case? Okay, so if we look at, let's look at a little example. So if we go back to this, so when I chart, I've noticed that breakers are sat below the fair value gap. So like with this one, for example, because what you can quite often get is like a double confirmation here, meaning that the manipulation move higher, quite often, the reason you get those fair value gaps, look at this manipulation higher before price trades lower. Why do we get these? Because liquidity is thin, meaning that the orders aren't pairing. That's why we get the inefficiencies, meaning that if a big player steps in here with, say, hundreds of millions, and you wouldn't even need that with a market like this, right? Then they can make that market move incredibly quickly, right? So the market pumps up here incredibly fast. So you see these inefficiencies. Now, this is a bad example. This is a better one. We see the inefficiency. We see the down candle before that pump. Now, if they really are big-time buyers stepping in here, price shouldn't come anywhere near this again, right? So when it does and it closes below, that's where we can get our entry. But yeah, I think there's some really interesting phenomena that happen with combinations with fair value gaps, breakers, order blocks. I know ICT, especially in his original mentorship, if we were to see a move like this, for example, then the last up candle here, we would allow for the wicks and the body because it had a fair value gap after it. So it adds extra validity to the fact that would have an expectation to stop price again, right? So let's just say, for example, we were taking that. Now, again, there's different teachings on this, right? Some people will say to you that you take the last highest volume up candle before the move lower, or you can take just the last actual up candle, which is more that I like to do. However, I would always recommend go away and study it. I definitely make an allowance for this, because we've also within here got like a balanced price range, right? This fair value gap being taken by this one. So this whole area is of interest. Now, quite simply, we don't have to kind of just jump straight in, right? We can see the reaction here. We can see the fact that we leave the fair value gap. We trade up into this. We can take entries there with our stops above here, Now, ultimately, if you wanted to choose this down to a lower time frame, you could wait for the secondary move and the break of structure, because higher high, higher low, lower high, lower low, break structure here, wait for price to return into here on a lower time frame, and then look to attack liquidity below this low here, which we get here. All right? They're the kind of different ways you can go about it. But it's a really interesting point there. What I would say with anything like that is, for me, you've really got to love data in trading, right? So when you see stuff like that, I can't count how many times I see some anomaly or something that really interests me or a pattern emerging, and then I will sit, behind the computer, behind the charts, just for hours and hours and days, just every moment that I've got just diving into that data. And you can find some really, really, really interesting things. So before I digress anymore, we can smash through the other alt requests that we've got. For me, I think we're looking at this trading lower. It makes sense to me that we take liquidity down here before potentially reversing. Obviously, want to have one little kind of eye on Bitcoin as well, just to see what that's doing too. So that's op. Let's take a little quick look at YGG for Youssef, shall we? We probably still got our TEA on there. So what we were saying, we're expecting a big dump and then hopefully holding a higher time frame FVG. I think it was maybe a 4 hour, looking for a recovery. So let's see if we got the move down. Whenever this thing wants to play ball. So the reason I was saying this yesterday, because I think those of you that know me know I don't really like making predictions, right? But when you see a really, really big move, then you can often see quite a big retracement as well, right? So I'm just going to pop this on the 4 hour. We can see we've got that kind of move lower. I think when this loads up, I think it will load up hopefully with all of the TA and scribbles and bits and pieces that we put on the chart from Monday. So hopefully it should be quite a quick one to run through. While that is doing whatever that's doing, it's worth noting that tomorrow, guys, we've got a really, really big news day. I think we can see some big kind of volatility coming to the market tomorrow. 1:30 British time, which will be mid 12:30 UTC. We've got US CPI. Jobless claims as well is tomorrow. I think there could really be a cheeky bit of movement tomorrow, and that obviously comes back and aligns with our pretty much perfectly with the start of the New York session tomorrow for equities, right? So we'll keep an eye on that. So yeah, okay, we can see what we got here. Price moved up, took liquidity above the high. This is our arrow from Monday, I suppose. Yep. And we got that move down, right? That's what, I don't want to say that these are predictable because the markets can do whatever they want, but you see a big move like this, the amount of people that try and throw in on that, thinking that they're, chasing something down, you're just basically ending up as exit liquidity, right? I think this looks heavily manipulated, this asset. So I think the TA on this remains the same, right? I think at the moment we're being suppressed under this fair value gap, yeah? Now, the plan was, as we had here, was that price would come down and hold in this FVG here, yeah? Now, this will be a daily, I would imagine. And the chart's disappeared again. I really don't know what's going on with TradingView at the moment. Well, we're back anyway. But, so, same principle. We're holding this at the moment. We're not really seeing any great move from price here, but we are kind of creating this sort of rounded bottom, right? Quite often you'll see this, and especially some really good position-based traders and investors, people that are looking for these real kind of like low-cap gems. You see this kind of start. The wicks start to get smaller and smaller lower down, and you build that momentum as price starts to come back up. However, for me, I would still need to see some kind of expansive move higher. I'd want to see some liquidity taken lower, a larger move up, yeah, and then to start to see on the lower time frames, like the fair value gaps, inverse, start to build a base, and then for price to start to kind of move forward from there. At the moment, this very much looks to me like quite a key manipulation in terms of this with YGG. We had price kind of building up to here. You had an unsustainable pump higher. This poor bit of chop here of people just trying to get involved and then ultimately running the highs, still convincing people to go long up here before it then just absolutely just goes and dumps into oblivion. We will definitely move on to XRP if if TradingView gives us the opportunity to. There you go. Yeah, I really don't know. It seems to save it for the live stream days as well. You know what? Hang on, bear with me a second. I'm just going to shut this down. And let's get it fired up again. Yeah, I do, Nick. I do. I'm. Everyone at the Nest will tell you I'm so awful with technology. I don't want to be. It's just I I don't think I had a kind of our generation. We didn't have mobile phones even until we were in like our late teens. So kind of probably just missed the computer generation for me. But I do like clear the cache and stuff like that. But whenever I seem to do something like that, you lose all your passwords, you lose all the logins, the auto logins and bits and pieces like that. So it ends up being a little bit of a nightmare for a Luddite like me. But I am getting better. I am getting better. The team do like to take the mickey out of me, but let's see if we can get this to behave a little bit better, shall we? Right. Give me 1 second, guys. Let me shut down these other screens for a minute. I don't want to keep wasting your time with this thing constantly freezing and messing around. Right, let's see if it wants to play ball again. And then I will absolutely clear that catch again after this, I think, Nick. Just take the hit and expect the and expect all my passwords to be gone. There we go. Feels a little bit smoother. Let's see how we get on. So next up is XRP, yeah? So let's take a look at XRP. Who was this one for? This was for you, wasn't it, James, I think? So once again, I know this can sound really dull, guys, but once again, we can see here on this chart, we're looking at this in the same timescales, right? Expansion, yeah, holding this area, continuing to hold this area, moving higher, no reason for us to look to short this while it shows strength. Once we took out the key liquidity above here, I think we'll probably see this a bit clearer on lower time frames, but we were ultimately looking for price to draw back down into this inefficiency here. Yeah, XRP obviously had a lot of bullishness here based on news, right? And then quite simply, I think our premise was, again, with the fair value gap, we want to see this hold. It isn't the cleanest, right? But we can ultimately see, look at these upside wicks, right? Price is just pulling down into this area here. We're also below this order block. Yeah. Hey, pup. Dog's just walked in looking confused. So we see this, right? We hold this here. At the end of the day, it's kind of like we were talking about earlier with price ranging. Take liquidity from the highs, purge to the lows, highs, lows, purge the lows, back to the highs, and we ultimately get the breakdown here. This really wasn't particularly clean to trade, but the idea and the principle was the same. If we broke out above this, we were still looking to be short here. Yeah, because with this draw from this fair value, this huge inefficiency down here, was very, very unlikely we weren't going to kind of go after that. So now we're in that, let's just hide that away for a second, because otherwise that's going to completely absorb the screen. So on a 4-hour basis, let's take a look at this expansion as well, right, in terms of our premium discount range. So a couple of things. One, we're kind of at the golden pocket here, and we're also holding the 705. Normally you want to see a little bit more of a bullish reaction there, but I can understand the caution coming in from people after such an aggressive pump. But if we look at our premium discount range, we can see that we're favouring long setups while we're down here. Yeah, it doesn't mean that we just blindly long it, but it means that that's kind of on our side. We're waiting for price to retrace down into a discount, meaning that it's good risk to reward allocation for long setups. All right. So as we look at this here, yeah, did you know what? Actually, I got rid of BT whack. Absolutely bin the bastards off. They spent ages drilling holes in the wall, putting different cables in, charging me hundreds a month to have 2 independent business lines run in and a backup satellite line. You wouldn't believe the stuff. And it was just rubbish. Absolutely rubbish here. So I moved to another provider and they've been really, really good. I think it must be something to do with the thing because I'm getting crazy speeds. But yeah, it's probably just something I'm doing wrong. Like Nick said, I'm probably not clearing the catch properly or something. I get one of the tech savvy guys at the Nest to update me. So what could we look at here? Because we can see actually we've got quite a lot of crossover here, right? See, the market movement's pretty efficient until we get to here, right? So for me, when we kind of set this here, I'm saying to myself, okay, what else are we starting to respect here? Which is when we can then look over here, yeah, and we kind of say to ourselves, okay, have we got anything? I mean, there's nothing really. There's this very small bullish fair value gap that we had here. When we close below that, lo and behold, price sells off and starts to attack these lows. Now, we would be looking for this up candle here to provide resistance as we come into it. So one thing I would say is that even if we allow for this whole block here, which encompasses this one as well before it, we've kind of inversed that as well, haven't we? So if we follow the same principle as looking with our FVGs, this order block here, price drew down, we'd expect it to act as resistance. It did immediately. Then we come above it here. When we closed above that here, considering the fact that we'd already taken out this high, price holds this fair value gap here, is telling me at the moment that price is still reaching higher. Yeah. Now we've got these kind of relative equal highs here. Yeah. So look at this kind of cluster of highs, which I think makes a really, really key target. Yes, there's a little bit of caution here because we're in this bearish fair value gap, right? But at the same time, I like to kind of apply more to the buy side of the curve here because we're now moving up rather than worrying too much about the sell side. Yeah, we can see price consolidating in here. We really didn't get the strongest move away from this FVG. We can see here, if we're just making an allowance for the bodies on this with XRP, again, we can kind of see price just running highs, running lows, reverting. But we do look to have a fairly strong close above this area now. It's difficult because we've got this consolidation going on. This is a little bit more of like a bear flag than a bull flag. Yeah. So normally with a bull flag, you would want to see this arch down, and then you have a high probability that price breaks above it. With these setups, the probability is that it breaks lower. Doesn't mean that it's going to. It just means that there's a higher statistical probability played out over time that it does. So how could we look to trade this? I think I would want to see something in the region of maybe like an M15. So we've taken out these highs now. I think the fact that when we've done that previously, look, we took out this high, what did we see? Immediate bearish reaction. Took out this low, what did we see? Immediate bullish reaction. Yeah. Then once we've had that bullish reaction, we didn't take out this high. So our assumption is price is moving for liquidity higher. What happens? Comes down into this fair value gap, into this order block, pushes up again, comes back down, respects this here as well, pushes up again, constantly taking out liquidity. So while it's in this bullish structure, it's very, very difficult to fade this. Yeah. Oh, so James have a small long at 0.6150. Ah, okay, nice. Nice. Yeah, try on the higher time frame, right? Looking for that kind of pullback. As a lower time frame trader, this has got a really, really nice structure to it at the moment. I think if I was going to be bullish on this, what I'd want to see at the start of New York, which we've got about 35, or haven't got that, when I would look to trade this in about 35 minutes time, which is this here, yeah. So that's 13:30 our time, which is 8:30 New York time, which is an hour before equities open. So that's when I'll start liking to look for positions because you can often see a move like this lower. Yeah, it doesn't have to be that. Could even just take out that low, right? And then we get a recovery. Within that recovery, yeah, we see a nice fair value gap. And then on a lower time frame, I like trading these on the M5. We can look to see if we get that nice structure break, retest of a fair value gap. So basically this pattern, but on a lower time frame, build a base here. So we have the manipulation, we have price moving against the market. If we want to see a bullish day, we want to see price draw down first of all. Yeah, so pull back. Then we want to see price expand, right? If we're looking for a bearish day, we want to see price draw higher and then drop lower. Yeah, always looking at that manipulation angle. So for me on XRP, I think that's what I'd be looking for heading into the New York session. What's Bitcoin doing now? Bitcoin's, that was really flat this morning, so that's starting to get a little bit of momentum. So maybe we see something higher here. I'm not really paying tons of attention to the DXY and equities at the moment because they've just not really been that correlated to Bitcoin, but equities are looking good today. The dollar's having a little bit of a pullback. So let's see what that gives us this afternoon. Now, HIVE, I believe, was one our lovely Erica asked us for. So let's have a look. Take a look at the Binance one, shall we? Let's have a look. Yeah, you're welcome, James. Yeah, I think it's really interesting actually what you were talking about there. In terms of having that position set lower, I think if I was looking to take that kind of trade on there, it's something very similar I'd be looking for too. Right. Let's have a quick look. Hey, you're welcome, MM. Very, very welcome, mate. Right. Cool. This has got some chop to it, hasn't it? Mm-mm-mm. So, yeah, I mean, when you really zoom out on these things, right? This is what I was talking about earlier. See this kind of a curved bottom that starts to build momentum, and then you see this spike up, draw down, and then that real expansion. You can see on this one, as we've got at the moment, that we've not quite got that at the moment. Price is kind of just stuttering up and down. These long upside wicks are showing us that after we have these big pumps, that they're immediately just getting sold back, pump, sold off, pump, sold, pump, sold. We've taken out liquidity below this low now. Excuse me. So let's zoom in a little bit, shall we, and see what this is telling us. If price action's really kind of choppy like this or a little bit unclear, often we're looking at kind of fairly liquid assets, right? So I like to really, really focus on recency and really kind of look to day trade this more than anything else. So let's look at our little story of price. Price ran the high here, ultimately reverting down. Price has set this low, so it came up, set this low, took this high. This is the low that swept the high. We've now come down and we've taken out this low, right? Now, look at the difference in reaction here. Yeah, so in a similar vein, we can see when this was taking this, see these untapped highs? You'll often see me do something like this with those. Yeah, because stuff like that is just resting liquidity. Yeah, I think ICT calls it LR, low resistance liquidity run. Yeah, meaning that there's not a lot of resistance for this to come through. When you see structure of previously taken highs and lows, then it just means that there's more data there for price to work its way through, right? There's a history of buyers and sellers there. At the moment here, there's no one taking this liquidity. So when price runs up into an area like this, we can often see these kind of quite strong reactions down the other way. So where are we within here? Right, we've got a big expansion here. Price has kind of made its way up. We're now kind of down towards this low, and we're also engaging this bullish fair value gap down here. So for me, what would I want to see here? We've got quite nice structure here on a daily scale, right? But I think the one thing that's a little bit concerning is we've taken liquidity below this low. We would have wanted to see quite a bullish reaction here, and actually price has just quite aggressively pulled back here. If I'm looking, which I would then turn my attention to here, is I'm looking for the last daily fair value gap, right? And saying what's price doing. We haven't got any bearish ones in here, but at the moment, what would be keeping me bearish would be the fact that we're under this. Yeah, so that was our bullish fair value gap. Price came into it here. We're looking for longs when it was still bullish. We got longs up to liquidity. Beautiful. Price immediately retraces. We close under it here, meaning our bias then switches to looking for shorts down to liquidity, which we get here. Now, doesn't mean that we can get those positions. You can make yourself sound really, really clever. Not really clever, but you can make it sound more clever than it is by looking at this and saying, oh, God, look, we lost that close here. We were obviously attacking that. Well, yeah, that's the easy part, right? Then you've got to drive onto the lower time frames and find entries and make sure you don't, because, often you'll see people that can do things on the charts really well. When you look at the chart, you think, oh, it looks clear, it looks really obvious. You then go and try and do it yourself, and you're like, Christ, why do I keep getting stopped out? Because it's one thing saying, okay, we're looking for shorts here, yeah. It's another thing finding an entry that you don't either get caught in a liquidity run or something like that, right? So as we're dropping down into this now, and forgetting about this at the moment, but you can see here, similar thing, big close below. What do? Look for the inefficiency in here, yeah, the fair value gap. We're then looking for price to trade into this. Ultimately, we get a little bit above it, but back into this, which is acting as resistance. Come back below it. What have we got here? We would have exactly the same thing, right? So now we just add this in on our 4 hour. And then we violate that, we close below it here. We're looking for short trades, first of all into this, yeah, then into this low, and then ultimately down to here. Price retraces. We're just looking for the bearish setups, like the fair value gaps, order blocks to hold. This FVG kind of holds, but this order block certainly does. Price trades lower, price trades back up into this fair value gap, trades lower. Now we're looking for the difference in delivery. Where's price delivering from? Yeah. If we want to be bullish here, we want to see this delivering from a bullish array, meaning like a fair value gap, right? Now, price tried to make this move. And again, look what we've got here, right? We've got this collection of highs, all untapped. Price has just run all of that, and now it's completely reverted. This upside wick is what I don't really like. It's really, really big, right? So it's really kind of forcing price down. And there's just not a really, really clear read here at the moment, right? We've got this volume imbalance here. Your price deviated above that, came back down. We dropped down to an hourly maybe. Okay, so hourly gives us a clean read. Now, one thing I will say is you see how we kind of started on the daily. We really couldn't find the read there. We dropped to a 4 hour, still wasn't really clean, but we've got our key levels, yeah? So we can understand what price is trying to do. Now, all we're looking to do is get involved in that price action, right? So here, I would say, okay, well, what's currently holding price? Yeah. We were looking up, we had this nice expansion higher. We had this bullish fair value gap here. Yeah. So this is probably one of the cleanest things on here for me, right? We had the bullish fair value gap. We were looking for price to hold this in a bullish fashion. It didn't. What happened? Closed below it. Yeah. So now we're looking for shorts. Where to? Liquidity resting below these lows. Ultimately, we took that, and now we're coming back up into here. So I think the cleanest thing for me, if I'm looking for this to go higher, is if we extend this out a little bit to here. I want to see a close above here, yeah, and then on a lower time frame, look for that market structure. And then, I mean, that's the next clear and obvious higher, right? I think we drop down to another time frame here. We can see price trying to make that expansion at the moment to get above this. But again, we don't want to get lost on the lower time frames too much. Like the 15-minute is the lowest time frame I would look in terms of looking for inverse fair value gap, for example, or retraces into them. 15-minute or lower than 15-minute would be more of an execution time frame. Okay, so I think that's it for me. I really need to see some conviction above this. Ideally we come up, expansion, leave a fair value gap, retrace into that, get on the M5, look for that nice move, which would look something like this. Yeah, we would see price move up. This would be our execution time frame. We then want to see price run a low. Yeah, back above that. And then within this displacement leg higher, what makes it a displacement leg is the fact that we see a fair value gap in there, which we would then look to target in here to take our longs higher. But again, on an hourly style, I really kind of want to see this held above. Touche. Good morning, my friend. Good morning. Erica, you're very welcome. Very, very welcome. So, yeah, I mean, this is a messy old beast, isn't it? But when you see these untapped highs, or in the same vein lows as they're building, they can often just be a great place to just big accounts come in, flush price up, take out all that liquidity before reversing it down. Now, I would expect to see a bit of a stronger move down than this because we've got a lot of liquidity resting below here. So at the moment, if we also reject this area or continue to reject it and we get a breakdown, that's what I'd be looking to trade a bit lower. All right, guys. So look, I hope that's been helpful. It's been awesome being with you again today. Can't believe how quickly the time just rips through as we're looking at them. We've got a good look at OP, YGG as well, a little bit on ETH to begin with, XRP and HIVE. So nothing really left for me to do, guys, other than wish you a really amazing week and an even better weekend. Do trade safe. Please do remember tomorrow we've got CPI, which can add a lot of volatility into the markets. All right. Brawl, you beauty. Always sneaking there in the background. Such a support, my lovely friend. Great to see you on here. Touche as well, James, Knit. Obviously, everyone else that came in, I'll try not to forget everyone. Obviously, MM as well. James 14, Whack. Brilliant to see you on here again, mate. Lovely, Erica. Yusuf, brilliant to see you. I hope you managed to catch that. Don't forget, If you want to see a bit of a deeper dive into that YGG, then we can take a look at that. It was at the end of Monday's stream as well. Of course, you beauty. Yargo, Imran Khan, brilliant to see you back on here as well. Our lovely Kelly Barker all the way from New Zealand. And just making sure I'm not missing out anyone else. I'm really sorry if I did. Nit, I'm sure I've mentioned you about 5 times, but I'll mention you again. Brilliant to see you all. Have a fantastic week. Please be aware of the Yargo as well, you legend. Please be aware of news tomorrow. And let's remember, you don't have to be in the charts every day, all right? Like, if you've got flat days, if the price really isn't moving, I know Bitcoin hasn't been doing a ton, get your head in your charts, back test, and get as much data as you can. All right, guys, fantastic to see you all. I will catch you legends around the nest. If you're interested in what we offer over there, you can find loads of goodies and bits and pieces down in the description. Or if you've got any questions, don't hesitate to reach out to me on Twitter. All right, guys, wishing you a fantastic week ahead, and I'll see you legends on Monday.